Um, Ladies and gentlemen, before we begin our presentation, I would first like to express my warmest thanks to the evaluation committee for accepting our paper for presentation at this conference. I would also like to extend my deepest thanks to all the people who are here with us. This paper, named Ifrs as one review of the issues, challenges, and opportunities in Morocco, will be is prepared by Mr. Eliud Rashid, Maqdad, Amchal, Lamalem, and will be presented by me. The importance of environmental accounting is rooted in the ethical responsibilities of companies to engage with the wider social issues they face, such as environmental concerns. Stakeholders have a right to know how companies are managing environmental requirements, and environmental accounting provides the tools and techniques to turn environmental risk into new business opportunities. Environmental accounting consists of modifying traditional economic and accounting models based solely on the philosophy of profit maximization in order to integrate environmental issues into strategic planning and project evaluation by providing external information on the state of the environment. Indeed, the growing importance attached to sustainable development has led accounting standard setters to place a greater emphasis on sustainability-related financial information. IFRS S1, proposed by the International Sustainability Standard Board, aims to establish a global baseline for sustainability-related financial reporting. Sustainability has evolved considerably in recent years, with organizations increasingly disclosing information about their environmental, social, and governance. The importance of this topic lies in the fact that integrating environmental accounting into financial reporting can provide a more complete understanding of a company's environmental performance and its impact on financial performance. This presentation will be structured in four steps. Firstly, we'll begin by the lateral review. Secondly, we'll present the research methodology that we have adopted. Thirdly, we'll discuss the results that have been obtained. And finally, we'll close our presentation by concluding. Our literature review is based mainly on the identification of documents dealing with the subject of financial reporting and sustainability. In order to describe the current situation and propose new avenues of research, this has resulted in the implementation of different laws, like the Environment Upgrading Strategy, the National Initiative of Human Development, the National Sustainable Development Strategy. This policy package in our country, Morocco, provides for the creation of system environmental accounting to value natural resources and environmental assets. It also encourages the integration of environmental costs into economic policies and decisions. About environmental reporting, we have found that the first report on environmental dates back to the 1970s. The development of industrial companies and serious pollution accidents justified the need to comment on the global deterioration of the environment. Secondly, we have found in 1990s that the companies listed on the financial markets should to present the reporting and to take part in the reporting the aspect of environmental. In Europe country, we have found that in 2040, the framework was appeared who the company should present the environmental contribution of financial actors. In summary, sustainability reporting requirements vary by region and shaped by regulatory frameworks and voluntary initiatives. Company must navigate a complex landscape of standards and guidelines to meet stakeholders' expectations and contribute to transparency and corporate responsibility. About the first is one, we have found four aspects that company we should to take in their reporting. The first, the governments, who make the process and the control who presented by their company. The strategy, who manages how to manage the sustainability related risk and opportunities. The risk managers, the process a company uses to identify assets, priorities, and monitor sustainability related risk and opportunities. And finally, metrics and targets who measure the performance in relation to sustainability-related risks and opportunities. About the impact of IFRS S1 in introduction, we have found in the papers that indicate that the adoption of IFRS S1 tends to improve the quality and comparability of financial information. This suggests that the introduction of IFRS S1 could potentially improve the transparency and reliability for sustainability-related financial information. For this, we will ask for the question by making studies that our studies was to research, to achieve the research about objective, rigorous, and comprehensive methodology was adopted. This involved consultation with stakeholders for a number of sectors working especially in the field accounting and auditing. That we have asked 185 professionals working in the accounting and director financial. We have been carried out on the management of environmental accounting as well as on the challenge and problem that practitioners may face when implementing this IFRS S1. In addition, an assessment was carried to determine the benefit of IFRS S1 for users. All these elements have made it possible to draw up complex. The benefits of IFRS S1, you asked the respondent to tell us what the main benefits of applying IFRS S1 for entity and investors. Improved compatibility. IFRS S1 enables entities to present their financial statements in standardized formats, making it easier for stakeholders to compare financial information between different companies and sectors. This promotes transparency and facilitates decision making. Improving the quality of financial information. IFRS S1 requires entities to provide more complete and relevant information in the financial statement, resulting in greater transparency and accuracy. This enables stakeholders to make informed decisions on the basis of reliable financial information. The third, regulatory alignments. The standards are aligned with evolving regulations and are being considered for inclusion in mandatory reporting regimes in countries, such like in UK, Japan, Canada, and Austria. The fourth, cost effectiveness. IFRS S1 is independent of national accounting standard, which means that it can be applied by companies using different accounting frameworks, terribly reducing the burden on both large and small companies. About the challenge of implementing IFRS S1, we have found difference, but we focus for four elements. The first, implementation costs. The transition to IFRS S1 requires entities to invest a significant time and resources in training employees, updating systems, and complying with the new standards. This can be difficult for small entities with limited budgets. Internal resistance. There may be resistance within organizations to integrate climate risk into a strategy, often due to a lack of awareness or understanding of climate issues. It may also be linked to be competing a priority within the company. Availability and reliability of data. One of the main obstacles is the lack of reliable and accessible data on climate risks. Entities often find it difficult to obtain relevant information to properly assess the climate impact of their activities and portfolios. Finally, the complexity of interpretation. IFRS S1 contains certain principle-based requirements whose application may require subject judgments. This can lead to variation in interpretation and inconsistency in financial reporting, making it difficult for stakeholders to compare entities accurately. In conclusion, IFRS S1 represents a significant step forward in the integration of financial and sustainability information within corporate reporting. It aims to harmonize the presentation of environmental data, thereby facilitating compatibility and transparency for stakeholders. Moroccan companies in particular are encouraged to adopt this standard to meet the growing demands of sustainability and social responsibility. The adoption of IFRS S1 is not only a regulatory obligation for companies, but also a strategic opportunity to align their practice with social expectation in terms of sustainability. This could transform the way companies report the performance by integrating environmental consideration at the heart of their financial and operational strategy. And thank you for your attention.